Good morning and welcome to my daily reports market analysis videos with me, which is Market Analyst at Hantec on Monday the 3rd of February. We've got a bit of a risk rebound, nothing too significant, and it's interesting that in the last week or so, every now and again we have had marginal risk rallies, but those risk rallies continue to be sold into, and you can see how equities in the States have really fallen away, really in the past week and a half, where the selling pressure has ramped up. You've seen VIX volatility moving to 3-4 month highs. We've seen the move on the S&P 500 breaking down, sharp move to the downside yesterday. I think that was the biggest down day that we've seen since August. And we saw the Chinese yuan continuing to weaken. This is all surrounding this coronavirus, which continues to extend and expand, and the outbreak is, in terms of number of cases, is continuing to grow. The number of deaths are continuing to grow, and it is a real risk concern for the market. And you're seeing pretty much across the board, really, there is still this net effect, a net move into safety, where the yen is strengthening. That is sort of continuing to move to the downside on dollar yen, which is a real show of weakness there. But again, a little bit of a rebound on dollar yen today, but is that a move that's likely to be sold into? Probably, I would say, given the fact that we've still got gold, which is trending higher, although again gold is back to an uptrend, and I'll tell you about the technical implications of that. And also we've got treasury yields, which again continue to fall away but rebound a little bit today. But is that rebound going to be anything really that the market trusts and moves into? So I think that how we see these market moves in the coming days, I think, will be interesting, because I think that likely to see that this rally again succumbs to selling pressure and falls away. So little bit of a risk rally today, but essentially under pressure. Look at this oil price. The key floor, that massive $50.50 support that we've got on oil, is a 12-month low. If you break down below that, you really are looking at a move back towards the crucial lows around 42 bucks. Look at 42 bucks there, how important that low is. Yeah, we could see a retreat back towards there in due course if that 50 bucks level is broken on WTI. So some really important levels, and another one actually on my chart of the day I'll speak about in a bit, which is the Aussie dollar. Now, in terms of data points today, we've got the first trading day of the month, which is manufacturing PMI's day. We've had this morning the Chinese data from Caixin. If I can find it, it's quite high up. Back here, 51.1, so still in expansion mode, slightly down from the expectations, but we have seen that today, sort of holding up a little bit of sentiment, and that risk rally is sort of been driven also by not only that Chinese data, but also the injection of liquidity by the People's Bank of China this morning of 1.2 trillion yuan, which is around about $170 billion at the moment. So that's an attempt to sort of shore up the system there, the funding system in China, and that has helped to improve risk appetite today. Now, we've also had the data out from the Eurozone. Manufacturing PMI 47.9, up from the flash reading of 47.8, and also a slight improvement in the UK data as well, to 50 from 49.8. So encouraging signs there from the UK PMIs and Eurozone PMIs, but essentially still sterling under pressure today is one of the stories of the day as well. Now, my charts today, I was talking about, before I get to that, US data, ISM. This afternoon, 3 o'clock, expected to see 48.5, slightly higher from 47.2, and still in contraction mode though, I would add. But we have seen the regional Fed surveys, which have been coming out in the last sort of week or so, and they are also coming out better than expected. Let me show you that data, if I can find it. Sorry, give me 1 second. Not coming through yet, which is annoying, but anyway. So yeah, the regional Fed servers have started to pick up, so maybe you're going to get some better than expected ISM data coming through. So anyway, sorry, that was a bit of an interlude. Anyway, right, so my chart of the day is the Aussie dollar. Now, we have seen the Aussie dollar. Look at this fall away. Actually, if you see the Aussie dollar across the course of the past year, you can see that it's basically unwound. A sharp rally has been completely unwound now, back to a massive basis of support, 66.70. That is the biggest, that is actually dating back to 2009 as a massive support. So if you lose, difficult to see there actually, isn't it? If you actually lose that support at 66.70, you're back at levels not seen since 2009. So really important support there. But look at the momentum indicators, 21 on the RSI. You've got MACD lines accelerating lower, but these indicators are not showing any signs of recovery. Stochastics still falling away. That intraday rebound on the Aussie has been sold into. 67.07 today's high before another sort of bout of weakness coming in. So at the moment we are closing, or we did on Friday, closing at levels not seen since 2009. So if you also see an intraday breach with 66.70, that would be really confirmation of that breakdown. Now, the only thing I would add to that is how extended the momentum indicators are. But to be honest, they are still falling. They are certainly in trending mode. So I think that there's no reason necessarily to think that this one's going to be stopping. So it's certainly, if the floor gets taken out at 66.70, that really is into well, sell-off zone, and just the floor taken out just really does start to fall away. Sorry, that's a cable on the hourly, but you can see here that the hourly chart shows that any sort of intraday sort of rally is being sold into today, and that continues to fall away. Lower highs, lower lows. You've got the old support becomes new resistance, and again that's coming in around that 67 figure area today. So yeah, anything that unwinds RSI on the hourly back towards 55, 60 is a selling opportunity, and again that's been where the market has faltered. Wow, so yeah, lots to be worried about if you are a bull, and yeah, that could again start to break down. So I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.